Hey guys, welcome back to the Level Traders YouTube channel. I kicked things off looking at NEO. Now I mentioned NEO in my last video about how it could be set for a major comeback. If we have a look at this weekly chart, we can see that this week price broke back above the long-term trend, confirming the comeback is firmly on. Price is now pushing to close above the 200-day moving average, which is around 42.29. That's also a positive. However, the week did not start great for NEO. Earlier in the week, NEO reported disappointing delivery numbers for October, which saw price retest that long-term trend, even falling below it. NEO delivered 3,667 vehicles. That represented a decrease year on year in October of 27.5%, and that's down more than 65% from September. And NEO put this reduction in deliveries down to production volume being impacted by restructuring and upgrades of manufacturing production lines in preparation of new products that are being introduced. You also saw rivals coming out with better numbers. For example, have a look at this headline. XPeng shares rose after it delivered more than 10,000 vehicles for a second month in a row. Li Auto, another rival of NEO's, said October deliveries were 7,649 for its sports vehicles, an 8% rise month on month. So you can see rivals coming out with better than expected numbers and NEO disappointing. That led to a sharp pullback on Monday. However, you can see from the weekly chart, this was a classic case of a false break, with price reversing sharply and confirming the breakout. The way price has reversed, expect further upside to come on this one. A couple of other factors to note. NEO is reporting its Q3 earnings on the 9th of November after the US close. That's one to watch. There was also an upgrade by Deutsche Bank, with the bank upping its price target on NEO to $70. Next up is drug maker Merck. Now Merck is on a hot run of form at the moment, with movements in price driven by fundamental catalysts. If we take this weekly chart, we can point out exactly where these catalysts have come from. Your first trigger was the announcement of the antiviral COVID pill, which saw price break through a 3-year wedge pattern. Yes, a 3-year wedge. That's how long it's been. Then it reported a blowout quarterly earnings report, which saw price break above this trend line in blue, which dates back to December 2020. On the back of earnings, you had a number of upgrades, which you can see here. And then most recently this week, you had this headline come out. The UK is the first to approve the Merck antiviral COVID pill. So this stock has gone from strength to strength. From the weekly chart, we can see that price has now run into resistance at the 92.20 level, and this will be the key hurdle for bulls. Price may take a breather here after the incredible run that it's had, before having another go at that 92 resistance level. I do personally think there is still more upside to come, especially because Merck is still waiting on the FDA approval in the US, which is expected at the end of November. So that could be another trigger. If price does get above 92, the next target will be around $96.70 to $97. Moving on to Fubo TV. So Fubo made a breakthrough this week, pushing above the 31.40 level, as you can see here in the daily chart, and it got as high as the 35.10 resistance level, which has seen price come off sharply. One thing to note on this stock, the short interest is relatively high on this one, as you can see here, and funds do remain short. As you can see from this headline, this was just one firm coming out stating they are still short Fubo, and what that means is the stock will have some wild swings, so that is expected. The move up is likely to have been a short squeeze ahead of its earnings. Now Fubo reports earnings on 9th of November after the US close. The company has beaten and raised its subscriber and revenue guidance in every quarter since going public last year, so that might have made a few funds nervous, hence the short covering. Also this week, this headline came out. Fubo launched its sportsbook, which is a live TV streaming with integrated betting on its mobile app, and it's available only in the US at the moment. There's also been studies by Gabelli Securities and the US Census Bureau that US sports betting revenue is expected to grow from a projected 2.1 billion in 2021 to around 10.1 billion by 2028. So there's potential in this stock if that market grows significantly. So going back to the chart, with price above key technical moving averages now, the momentum is firmly with the bulls. There is also a case, as you can see here, that I've drawn out a cup and handle pattern, which if it plays out, could see price heading towards at least 37.60. Now if you want to know more about cup and handle pattern, I do have a separate video on this, which I've put the link to in the description box below. Finally, onto my new trade idea, which this week is Caterpillar. Now Caterpillar has broken out of a downtrend that began in mid-April this year, and the trigger for the breakout was a better than expected earnings report. Caterpillar reported quarterly earnings that beat analyst estimates as demand for heavy machinery across construction and mining sectors outweighed concerns over ongoing supply issues. The company also said demand for 2022 is looking strong, and it beat on both earnings per share and revenue, as you can see from this little snippet I've got. Now this week, price has come back to backtest that breakout area, as you can see here from the weekly chart. If price can hold onto this 198 area, this could really kick on in the coming weeks. One of the reasons why I like this stock is because I don't believe inflation is transitory, like the Fed do. And for that reason, I think Caterpillar is one of those stocks that will benefit from an inflationary environment because of the sector it's in, and it will be able to raise prices to offset any increase in its manufacturing costs. Just have a look at this extract I've got from their earnings, which shows a walkthrough of revenue year on year. You can see sales volume was a big driver of the increase, but look at price realization. That was a fair chunk as well that made the move higher in revenue. And that's exactly why I think it will be shielded from higher inflationary environment. It's going to be able to increase prices and benefit from this. And that's why I think this is a good stock if you believe inflation is here to stay. With that said, that's my weekly update. I hope you found this useful. Remember to hit that subscribe button so you don't miss any future content. And I'll see you at the next one.